Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about Palantir Technologies PLTR stock and how it can surge from $12.35 all the way up to over $60 per share. We're going to be going over the latest price targets from analysts, what the stock should currently be worth right now, if it's a fantastic buying opportunity because of this recent pullback, and we're going to use the most up-to-date valuation models to determine what Palantir actually should be trading at. And we're also going to be going through this highly requested article of how the PLTR stock can generate returns for its investors of over 20% per year on a compounding annual growth rate basis all the way until 2030. And this is a very impressive metric of over 20% because by comparison, the overall stock market, specifically the S&P 500, which we use as a stock market benchmark, only returns about 10% on a compounding annual growth rate basis. However, if we incorporate inflation into this statistic, we actually have to take out 2 to 3% from the 10% because they're both CAGR rates, so really the S&P 500 is only returning around 7 to 8%. And Palantir's PLTR stock is looking to more than double that return for the next 9 years. For more videos on Palantir Technologies, remember to go and smash that like button right now, subscribe if you are new, comment your thoughts down below about the PLTR stock price and your personal predictions for it, and without further ado, let's get right into today's stories. So Palantir's stock price, ticker symbol PLTR, currently trades at $12.35. The low-end price target according to analysts is $15, and again, it's really good to see the current stock price trading below the low-end analyst price target for the stock, which means we could be getting a fantastic deal. The average price consensus among analysts is $21.06. The high-end price prediction among analysts is $25.30, so we could easily double our money in the span of 1 year, and the highest price target that I could find from a reputable institution and analyst goes all the way to $34 per share, which would mean that the PLTR stock price could literally surge over the next 12 months. If you didn't know, Palantir Technologies is a big data and analytics company that sells their platforms to both commercial enterprises as well as government agencies. But now let's calculate what the PLTR stock price could be at a 20% compounding annual growth rate. And again, this author actually says it could grow over 20%, but we're going to use 20% so we can get a mild conservative price target for the PLTR stock. And just keep in the back of your mind that the real price target is actually going to be above this conservative estimate. And to perform this calculation, we're going to use one of my favorite tools from the United States Securities and Exchange Commission, which is a compounding interest growth calculator. So to do this, we're going to put in the current stock price for the PLTR stock of $12.35. We're going to make no monthly contributions. We're going to have a time span of 9 years, which is from 2022 all the way until 2030. And again, that is not 8 years, that is actually 9 years, because you have to count the entire year of 2022 on top of the entire year of 2030, just before you begin 2031. For our estimated interest rate, we are going to use our conservative CAGR or compounding annual growth rate of 20% and not over 20%, and for this particular calculation, we are not going to use any variance. And when we press calculate, our total is $63.72 for the PLTR stock price. However, some investors may not think that this is a good return for a stock going to $12.35 all the way past $60 in the span of 9 years. However, if we compare these returns to the S&P 500, which is a very well-known index and it's a benchmark that is used for the overall American stock market, that only grows at a rate of around 10%, so we are more than doubling this. However, I'm going to take it a step further and say, what if we actually invest into 1,000 Palantir shares? So we are going to buy 1,000 shares, which is going to increase our average cost basis, so we're going to spend around $12,350. We're going to make no monthly contributions again. We're just going to do a one-time investment of buying 1,000 shares at the stock's current stock price. We're going to leave and maintain the length of time of 9 years until 2030. We're not going to increase the interest rate at all. And now we're going to press calculate and we're going to compound this on an annual basis, and bam, we get $63,723.29. So to me, turning $12,000 into around $63,000 in 9 years is absolutely phenomenal, and it's actually pretty insane. However, the good news keeps going on, because let me go over the newest price estimates and targets for the PLTR stock as we calculate it, and I'll also give you the newest news updates for this particular company. So let's start off with what has changed in Palantir. Why is the stock price crashing right now? Since one of their highs, the stock price has dropped around 65%, which to me is a fantastic buying opportunity. And the reason this is dropping is because many investors are liquidating their high growth disruptive technology stocks because the Federal Reserve, of course, is increasing interest rates, and that's going to happen in March. This has pushed investors to take money out of growth stocks and put it more into value stocks, and value stocks and blue chip stocks are normally already profitable companies, which means that they are actually creating profits. So for many growth stocks, investors invest into growth stocks before they are actually profitable, which includes Palantir Technologies, but we're going to talk about their forecast for when they will achieve profitability literally in this video. We can also see that many other growth stocks and even growth ETFs, such as the ARKK ETF by Cathie Wood and ARK Invest, has also fallen a gigantic amount, down more than 54%. Now, this does not mean that ARKK is a bad investment, and it also doesn't mean that Palantir is a bad investment. It just means that the current market environment is very volatile right now, but it doesn't change the fundamentals of the company, which we will talk about, and it also doesn't change their long-term price appreciation. Now, what's really disheartening for many Palantir shareholders is that management has actually doubled down on their stock-based compensation policies and says that they're not going to stop that anytime soon. So this is another reason why the stock price is falling and why investors are wanting to get out of this company right now until they have stopped their stock-based compensation. This stock-based compensation is not all bad though, because it helps Palantir retain the top talent and the best engineers in the entire world, which gives them literally the best products in the entire world for their respected industry, or at least one of the best products in the entire world. It also gives their employee some skin in the game so they can share investor frustration, because if the employees are also holding on to the stock price, they want to increase the company's overall reach and revenues, because that would make their stock price go up, and therefore the employees will get paid even more. Lastly, this stock-based compensation plan actually saves and preserves the cash that they have on their balance sheet, along with their short-term investments and other liquidity that they can reach into at any time, and that number currently is around $2.5 billion worth of liquidity on their balance sheet that they have full access to. We're also going to talk about their addressable market that is growing at a rapid pace, and I'm extremely excited to get into those details. Palantir as an overall company is rapidly developing, both in their market share, the products that they're offering, and they're growing as a company and hiring more employees. The company has around $120 billion worth of an addressable market that they are constantly increasing their market share of. They are stealing market share from other companies. To bolster Palantir's growth, they are actually wanting to expand more in international business, because right now they're pretty concentrated in the United States. They have done some overseas work, but now they really want to address and expand the international business of their technology. And Palantir's management is 100% on board to infiltrate and penetrate the international markets, which is going to lead to better cash flows, more revenue, and hopefully a better, higher stock price. Palantir is also a highly valued company in the United States because the US government loves Palantir as a company, because Palantir is one of our forerunners to compete against Eastern countries such as China in the AI race. Currently, analysts project that Palantir's total addressable market could grow by around 20% per year, which is amazing, and this market is supposed to grow all the way until 2030. This would make Palantir's total addressable market over $600 billion. To put that into perspective, Palantir Technologies currently only trades at a market cap of around $24 billion, so you can see that Palantir has only attained a small portion of this overall addressable market by 2030. At minimum, even if Palantir Technologies does not increase or gain more market share, if they just retain their current amount of market share that they have, the floor and the compounding annual growth rate that we should see in Palantir is 20%, and that is why we used the floor of 20% for our compounding annual growth rate for the overall stock price. However, this is a very conservative estimate, and I personally think that they are more than capable of attaining and addressing a larger market and stealing more market market share from existing competitors. Because of this is going to be reflected very heavily in their revenues, because management currently has a forecast of Palantir Technologies bringing in over $4 billion worth of revenue by 2025. However, analysts actually think that management is purposefully lowballing their estimates so they can continuously post earnings and market beats, which should increase the stock price, and to me that strategy is pretty genius. However, analysts think that the company will bring in over $5 billion worth of revenue in 2025, which would actually equate to approximately a 35% compounding annual growth rate for their revenue, well above 30%. That means they will be bringing in $15.4 billion by 2030, with only 2.5% of the total addressable market. And again, these are very reasonable, conservative, low-end price targets and price estimates for the stock price, for the compounding annual growth rates, and for their revenues. This is almost a worst-case scenario here, and to me, these numbers look absolutely phenomenal. However, the big question is, when will Palantir reach profitability? What about their earnings before interest, tax, depreciation, and amortization, also known as their EBITDA? Well, Palantir's EBITDA margins will end up being very impressive. Their margins were around 18.6% for 2020, and overall for the full year of 2021, the EBITDA margins are anticipated to be 30%, which is mind-blowing. By 2030, the EBITDA is set to come in at $4.6 billion, which is absolutely insane. This means at the current EV over EBITDA multiple of 30, the company would be worth around $140 billion. This represents a very large increase from the stock's current enterprise value of $24.5 billion. And if we do the math here, that's around a 5.71428571 times increase, and we can actually apply this to their stock price. So if we multiply 5.71428571 times the current stock price of $12.35, we are looking at a minimum average price target, according to this analyst, of $70.57. All that to say that Palantir and their PLTR stock looks to be in a very strong position. Although the current market price is dropping like a rock right now, the future price projections for this company look very positive, even if we take low-end conservative price estimates, which we did, and that is exactly what this article gave us. So despite this recent sell-off, to me it's a good buying opportunity, but remember to always do your own research. You may have different goals than I have. Always do your own due diligence. But with that being said, remember to go and smash that like button right now. Comment your thoughts down below about Palantir Technologies. Subscribe if you are new, and I will see you in the next YT video.